So much for watching Morning Markets. We try to make sense of the stock market for you, but quite frankly, over the past couple of months, it's been kind of a snoozer. We have just been trading flat on the S&P and the TSX. There's a bit of volatility under the hood. All of this seems to hinge on where is central bank policy going? When might we get that definitive pause and thus that big torque to the upside, or when might something break and a big fall to the downside? That's the stock market. But if you're buying a house, you've wasted no time. You've heard the word pause from the Bank of Canada, and home buyers are out the gate again. The latest numbers from CREA, the Canadian Real Estate Association, underlines that we saw home sales surge 11% from March to April, the biggest monthly surge since the pandemic took hold, and we got a big boom in the housing market in July 2020. Could this be something that softens the blow for Canada's economy as we edge towards a slowdown? We'll unpack all of that. We've got Francis Horodelski joining us as a guest co-host for the next hour. Charles St-Arnaud, chief economist at Alberta Central and former economist at the Bank of Canada. And of course, BNN Bloomberg's David George Kosh has been leading the charge on these housing numbers. David, first let's just unpack some of the latest enthusiasm that we have for Canada's favorite asset, homes. Yeah,
spring housing certainly came in with a bit of a roar in April, up 11% on a month-by-month basis, but they were still down by nearly 20%. Whoa, that's a bit of a close-up there on my beard. Nearly 20%.
Good thing you combed it today.
Hey, I gave it a trim this morning. Meanwhile, the real issue that's impacting housing sales right now, as you kind of alluded to earlier, was the fact that listing properties are only up 1.6%. That's not a lot. And when you have a strong labor market here in Canada, no one needs to quit their jobs and sell their homes in order to find a new one. And with that being said, that's why we see those listings continue to hover around those 20-year lows. Now, the home price index is also up 1.6%. I actually had to double check to make sure that CREA didn't double those numbers. It's also 1.6%. The average home is now around $1,700 and $16,000. But on those sales, we have a chart that shows our viewers just exactly putting in context. And April is higher than what we've seen in an aggregate over the first quarter of this year. But again, a little bit lower than what we've seen in the previous year. And also you saw in 2020 and 2021, just that frothy market coming to light amid low interest rates from the Bank of Canada. And as you said, look, the Bank of Canada is pausing rates at 4.5%. It essentially seems like that's what the case will be for the rest of this year. And why not see people essentially take stock of that, say, well, there's no better time to buy than now. Rates won't get better, won't get worse for the time being. They have some disposable income. They don't need to move jobs because of the labor situation. So why not go and buy a house? That being said, it's a seller's market. Anecdotally, here in Toronto, I know people that are looking for homes and putting offers more than $200,000 above what we're seeing. I mean, it's getting silly again here.
Bidding wars are back. My brother, who's a realtor, said he had a house that had 20 bids on it. So it's back.
And so where is the strength? Is it in the high end? Is it in the condo market? Do we have that kind of granularity?
I think in terms of the CREA, the first blush that I was able to see, I don't think they necessarily break it down in this particular number. We do see the regional boards that are highlighting how those detached homes, for example, in Toronto and Alberta, are rising more than what we're seeing in condos, although condos is starting to pick up again. The price movements between what we're seeing in condos and detached homes seems to be moving in the same direction, but I believe detached homes continue to be the biggest demand in the market. Their condos, they are moving higher, but not at the same pace of what we're seeing with other housing units.
Let's bring in Charles. And Charles, maybe you can help us understand the why of it all, because certainly it seems to defy, current debt levels. Interest rates are higher. The cost to pay your mortgage is higher than it was when interest rates were zero. And we have, these storm clouds for the economy gathering. Does it make sense to you even with all of those factors?
Well, I think there's different factors that explain why the housing market is doing so well. So I think, as it was explained, there's a big mismatch more and more between supply and demand. Supply is extremely constrained. We're not seeing any new listing coming up, or any increase in new listing doesn't or gets fully absorbed by the amount of sales. So that is already tightening the market, pushing prices higher. So that's one part. But then on the demand side, for a lot of consumers, one, interest rate has increased. So yes, affordability has come down. So people probably have adjusted their expectations to, well, maybe I will need to buy a smaller home, or instead of being for detached, I'll go for a semi-detached home or a row house. So they're gradually shifting their expectations of what they can afford. But having the labor market remaining very strong, no big signs of any job loss, is probably giving a lot of confidence for future buyers to come on the market. And there's also probably a bit of fear of missing out. We've seen over the past decade how house prices have increased rapidly. We know immigration is going to be a big source of population growth, and there's not any new building being built in most areas in Canada. And so pressures will continue on prices.
I want to underline that point about immigration, because more and more we're seeing sectors able to buck the growth trend by relying on immigration. And that's sort of how Canada is different from, say, the United States. We have a big immigration drive. You know, telecoms are able to add all these new subscribers, see huge growth thanks to immigration. To what extent is this kind of a real top demand driver? And if it is, does that allow it to persist, even though other parts of the economy may falter?
Well, it obviously puts a baseline growth to all our sectors, from retail trade to housing to consumer side of demand, but it also comes at a cost. Like, we don't have enough housing being built for all those new arrivals, and that's pushing prices higher, both on housing, homes if you want to purchase, but also we're seeing rent throughout Canada increasing rapidly. And it also puts strains on public services. So unless provincial government take into account those high level of population growth, we might start to have some issues on that front too.
What other interventions could be dreamt up on the part? You mentioned the provinces, but even the municipalities. We have a vacant home tax. We have a foreign buyers tax. We have the land transfer tax. We've created over the past 5-10 years so many interventions to make it affordable, except for that one, which is build more of it.
Yeah. Well, it's clear that what we have as a problem, we've tried to solve the housing issue by dealing with demand, not with the supply side. So we really need to start tackling the supply side. That will mean, and yes, it means, we will need to think about densification of our cities, building a bit more multi-unit, but also think about what kind of unit we're building. Because sometimes I see some project of revitalization of downtowns and all that, and we build 1 or 2 bedroom units, but we kind of leave out completely families that need probably slightly bigger size apartments. So we need to really think hard in terms of, and it's all levels of government. It will be municipal, it will be provincial. That will need to think hard in terms of how do we tackle that. Otherwise, we're getting into a period where the average household in Canada will pay a disproportionate percentage of their income towards shelter, and that will reduce their capacity to spend on other goods and services.
Charles, thanks so much. Important perspective. We appreciate it. That's Charles St-Arnaud, chief economist at Alberta Central and former economist at the Bank of Canada. And Francis and David, while I still have you at the desk, I just think about what this could mean for the banks, right? The Canadian banks. Yet again, they're going to be able to lean on the housing market.
Well, I just wrote down 2 things while Charles was speaking. One, OSFI. What do they think about this? How are this increase in activity being financed? What is the strain, if at all, on the banking system? And the other thing is, what does the Bank of Canada think of this? Because they were looking to cool down the housing market. It did cool. But if it ramps up again, if it gets hot again.
And I do want to mention that a lot of the price gains that we did see on a month-by-month basis were isolated mainly in GTA and BC Lower Mainland. To your point about immigration, when people come to Canada, where are they going to go? They're likely to be more attracted to the GTA as well as Vancouver, the Vancouver area. If you take those 2 markets out of the mix, the average price in Canada is down $716 minus $144,000. So there's still pockets of affordability in this country, but we're still seeing the same sort of trope BC and Vancouver and Toronto continue to drive the gains here in Canada's housing market as we recover from those the 2022 sort of malaise that we saw through the bank, rising rates by that extraordinary amount.